Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and before we get started, standard disclaimer, nothing here is investment advice. Do your own due diligence. Today's episode is sponsored by MoneyMetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JesseDay to get a $10 discount on your first purchase. And today's guest is an analyst with an illustrious career on Wall Street, including stints at Merrill Lynch and JP Morgan Chase. He is the founder of Feneck Consulting Group, someone I always love talking to. It's John Feneck. Welcome back to the show.
Thanks for having me back, Jesse.
Yes, today we're going to be discussing all things uranium, so I'm very excited for this conversation. The market currently sentiment very high, equities doing extremely well. So let's start with your overall assessment of the uranium sector at present. What has you excited? And before we hit record, you mentioned you had some concerns with how overbought the sector may be at present. So maybe you could talk about that as well.
Sure. Concerns in the sense of, relative strength index, RSIs are approaching 70 or at 70 on a lot of names now, where that was not the case Jan 1, right? So we've seen a beautiful move in spot price here. We haven't seen this kind of a move, obviously, in 17 years in spot. So, it's normal for the equities to start playing catch up, because if you remember last year, we talked on your show about, hey, these uranium equities look attractive, but they haven't moved nearly as much in percentage as the spot price, which is weird. It's like if copper was up 100% and you had a copper stock up 30%. Well, you're not taking risk in an equity for a third of the return. But I mean, that's really kind of what happened with some of these uranium names. So January, in my view, has been a catch-up trade. We said that on Kitco in November. We just said it again at Kitco in Vancouver's VRIC conference last week that just went live yesterday with Paul Harris. And I really believe that there's going to be some more catch up here. I was just kind of saying that, like, you have to always watch valuation because nothing is a straight line up.
And talk to us about RSI, relative strength indicator. I know that's a technical indicator. Not everyone watching would be familiar. So what does that indicate, and how do you use that to determine whether it's a good time to enter a trade or not?
Really layman's terms, you can go to a website like stockta.com. It's a free website. It looks like it was made in 1990. I mean, it's pretty rudimentary, but it gives you some really cool metrics for free. What I use it for is the RSI, which gives you, if you're at 30 or lower, that is usually a oversold condition, meaning it's a buy. If you're at 70 to 75 or higher, it's usually a sell because it's overbought, right? Like there's too many people buying the stock. So 30 to 70, 75 is sort of my range. And I'm telling you, like, a lot of traders look at this and you kind of have to be aware of that. Now, again, if you have a drill hole, like, I saw from F3 Uranium this week, like, really good hole there. Like, the RSI is less relevant because it could get to 80 pretty easily, right? The stock just broke out yesterday. So it's a relative thing. But what I also like that website for is support and resistance. Support and resistance on a dollar or under stock is somewhat less, relevant, but it still gives you an idea. Like, for example, the support level on that stock I just mentioned, F3, is 31 cents. It's trading at 38 cents. So, I've got orders out there at 31, 32. I'm just waiting to see if it gets back down there. Maybe they do a financing. I'm not suggesting they are, but like if a stock would do that, then like that just happened with baseload, right? Like I think I mentioned that on your program at like 30 back in the fall, and now it went to 42. They do a $5 million financing. It gets back down to 32. So we bought some, right? Like, I think that site is pretty cool for just, the average investor to get some free information and get a better understanding of technicals.
And just one more point on RSI, and then we'll move back into the uranium discussion. When looking at that indicator, do you tend to look at it on like a daily, weekly, or monthly basis? Because I know you get different readings depending on the time frame you look at. So how does the average investor wrap their head around that?
So that website defaults to a 2 week look, 14 days. And that's kind of what I use just as a gauge. It really works, I'd say, more than 70% of the time. Anything in investing, when you can get more than a 50% win ratio, is a positive.
Right. So I want to talk about sentiment in the uranium sector at the moment because it is currently very strong. If you look across uranium Twitter, it's champagne memes, some of which I've posted, so I'm guilty as charged on that one. It's high fives. It's this sector is going to the moon. This is only the beginning. Um, However, we have yet to see institutional investment in the sector in any meaningful amount. What do you think it'll take to bring the big players into the uranium sector from this point?
The same thing is going to take in the gold space. Gold was right at an all-time high last week of December, right? I myself thought we would break to a brand new high as early as this past month, January, and we didn't. So when you see that failure, institutions are like, well, that just failed. So we're just going to hold off again. These people want to see a breakout above a new time high, a new all-time high, which again for spot uranium goes back to 2007. I think it was in the 140 range, but I'd have to double check. So when we get to that 140 range, you're going to see a lot of people get interested. And a company like Sprott really is well positioned. That ticker is SII. If you look at their last quarter, actually, and I worked there, their last quarter was 25% of their revenues was generated by uranium, which is nuts. So that is sort of a backdoor uranium play for me. I trade the stock. I don't own it like long term because it is, I wouldn't say volatile, but it's not like a straight line up. It's more of a financial stock. But if you want some gold and uranium exposure, that's a kind of an interesting way to play it.
And then besides Sprott, what do you think the main beneficiaries will be if institutional investment comes into play in a big way? Is it the ETFs, the Sprott Physical Uranium Trust, the URNMs? Obviously, Cameco and Kazatomprom being the two biggest publicly traded producers will probably also benefit. Do you see that trickling down to the developers or some of the developers who have recently moved into production, such as Energy Fuels and Encore Energy?
Yeah, I do see that trickling down into the names you just mentioned, as well as the explorers. I mean, there's going to be people betting on, hey, this management team looks really strong here, right? And one to mention would be that I met with in VRIC just recently is Costa Resources, COSAF. Keith's a young CEO, but he has a deep bench there led by Craig Perry, who's got a lot of experience, from Skeena and from Vizsla Silver. So, when you look at that and you say, okay, these guys are cashed up, they're drilling right now. They just announced this. They're going to have results, right? And you want to position yourself in companies that are going to have results and or produce good news flow. The days of we're not going to put out a news release for 3 months, to me, have to be over. We still see this in the junior market all the time. I'm not picking on uranium companies. I'm saying more so like gold, silver, platinum. A lot of these companies just don't put out news for 8 weeks, and it's maddening. So I also look for that, Jesse. I met with F3 actually yesterday, and I love that they're putting out news, 4 or 5 times already in January. It's like it really keeps people engaged in the story. And if you have, let's say, a pullback in spot from 101 to 80, which in a bull market is not unusual for pullbacks to happen, of course. Then people will stay engaged in the stock, right? Because they know that there's going to be some more good news coming down the pike. And I'll also mention, because the management team pointed this out to me, they announced 2 weeks ago that they're going to have a spinoff, which is called F4. I think that's going to be a Q2 event. So that's kind of interesting.
Yeah, very interesting for sure. I want to get to the big news of the day, Kazatomprom confirming that they will miss production targets over the next couple of years for a company that produces some 40% of global supply. How big of an impact will this news have on the market over the long run, in your view?
Long run, it's hard to say, but for the next 3 months, it looks really good, right? Because companies produce earnings every 90 days. So we'll get more color from Cameco next week, CCJ, and we'll see what happens there, right? But if you see similar wording in their press release, I mean, I think you're going to see a lot of your buddies online get even more excited, right? Because a supply shortage, you don't just flick a switch on and turn on a uranium project, right? It's like months and months and months, if not years and years and years, to get to where you got to be. And it's just that's true of most of commodities. I read a cool piece in Barron's last January, I remember, on copper, and they were just pointing out it's going to take like 7 years for so many of these copper projects to come on. It was kind of weird last year that copper was actually down as a commodity, given that there's so much interest out there. But I think, I'm pretty bullish on a lot of areas of the commodity world right now. Where, as you know, that we've known each other for about 3 years now. I haven't been that bullish on a lot of these areas, but we're starting to see life, which is really positive.
Yeah, and this news coming out of Kazatomprom obviously putting to bed this theory that's been floating around for a while now, that Kazatomprom can kind of just ramp up production whenever they feel like it. And as soon as the spot price of uranium goes up, well, they're just going to ramp up production to meet that and, keep the price low. So that is now being put to rest, I believe, for the moment being. Now, I'd like to dive into more of your own approach when it comes to investing in the uranium space. You mentioned a few names there, but just from more a general point of view, how do you approach the sector in terms of the risk spectrum? Do you mentioned some explorers there, F3, Kosa Resources. Do you look mostly to the exploration side of things? Do you also look to developers, producers? Do you invest in the ETFs as well? Is it a mix of all those things? Well, what's your approach there?
It's a mix. I have a background in ETFs, so that's always going to be a core for me. On the gold and silver side, that core would be like GDX. I really don't like GDXJ that much. SILJ had a rebalance this week. I don't know if you saw that, but it caused massive turmoil in a lot of names. So I hate when that happens for the companies, but I love when that happens as an investor, because some things are up 20% or down 20% based on a rebalance. This happens every 90 days. In this case, it was a weird one because a company came in and bought the ETF, actually. So they rebalanced on a non kind of rebalanced date, and it surprised the market. So yeah, that's SILJ, SIL and SLVP are the larger cap silver stuff. In the uranium space, I tend to focus on URA, just because it's really got a lot of AUM, assets under management. You have to keep an eye on assets under management, because remember, these companies may put out ETFs, but they have to make money with them. And what I mean by that is, if you're not at like a $50 million AUM, if you see less than 50 million in something, there's a chance that company might just fold the doors and say, like, we're not making enough, money on this, right? Because they need to get their management fee. They need to pay their portfolio managers, and their staff. But one that is something I'm tracking and own a little bit of is URNJ, which is Sprott's newest uranium junior, right? So like, that's kind of cool, because you can buy that if you don't want to cherry pick the juniors and have at least some type of foothold in the explorers. But to answer your other question, I do have a mix of the larger stuff. Like, we own Denison. We've been tracking a lot of stuff in the larger space. And then in this explorer space, yeah, I mean, this is the time you just have to throw some money at some names after you talk to management, like I'm doing, right? Like, I went to Uranium Night at VRIC. I met 7 different CEOs in 2 hours. I met with, as I told you, Kosa and F3 in the last 2 weeks. So that's 9 CEOs I've talked to in a matter of 10 days. So it's like, that's the work that we do for our clients, Jesse, is we're actually spending 30 to 50 minutes roughly with a CEO and just asking a bunch of questions in terms of timelines, because I don't want to invest in something that's, going to be like, 12, 13 years away necessarily. I want to see, if it is that far away, I want to see a path, right? And I want to see it on their website. I want to see it in the deck. Like, we're seeing a lot of people talk out of the side of their mouths, and it's like, hey, why don't you put that in writing? So we can, as an investors, get more comfortable with the fact that you guys aren't just going to do whatever and take forever, right? Because mining is more and more complicated to me every year, and I do this for a living. What I mean by that is look at the problems we're seeing geopolitically. It's just unbelievable. I mean, BTG has been in Mali, Africa for so many years, and they just announced bad news in Mali, and the stock went down 10% in like 2 days, and so you have to be able to factor that into your decision making. So one of the other things that we may bring up later here is jurisdiction within the uranium space.
And well, why don't we go there right now? Jurisdiction. Obviously, we saw some turmoil in Niger with the coup there. That seemed to affect some of the equities, although at least I know Global Atomic has rebounded quite nicely from that situation. I don't follow any of the other miners in that area because I don't own them. But obviously, geopolitical risk and jurisdictional risk is ever present. I mean, just look at the Cobra Panama mine and
Oh,
that situation in Panama, which affected not only their stock, but it kind of crushed Franco-Nevada as well,
really
which
did.
is supposed to be a safe, bet
Hey,
in the gold
yeah,
and silver space. Yeah, right. I believe in hindsight they may have been over allocated to that particular project. How do you mitigate jurisdictional risk? Do you spread out geographically? Do you stay concentrated on parts of the world that are, quote unquote, follow the rule of law and have a longer history of successful mining without governments nationalizing or those types of things? How do you mitigate that risk?
it's really just talking to CEOs and then asking them difficult questions about where they're mining, right? Like, I mean, tell me the bad stuff. I don't want to know the good stuff. I can go to a website and find out anything I want about how beautiful Panama is or whatever, right? It's like, but no one saw Panama acting that way. And so that's what took people by surprise. And I don't think Panama is going to get much investment at all in the mining space after this. I mean, it's just like, wow. But I'm okay with going back to jurisdictions where I've pulled money from in the past, meaning Peru, right? You saw what happened with Castillo. He gets all crazy in office. Then he goes to jail, like, 13, 14 months ago. So last year, we were buying Peruvian stocks because we're like, at some point, these things are going to move up. If you look at Buenaventura, BVN, beautiful looking move off the base. That's not true of all Peruvian stocks, but like, Argentina is starting to get a little interesting to me now with the new leader there, right? Because we had this oppressive woman in office for so many years, and it just killed mining investment. And now this person is actually saying, we'll see if it comes true, that hey, we want to encourage people to mine here again. Look at what's happening in the Salta province of Argentina, for example, with lithium. I mean, it's just a bonanza right now. Like, I think there's 5 different companies that are going into production in the next like year or something. So Argentina has become more interesting for us, not necessarily in lithium, but gold and silver producers, right? Because they're going to be beneficiaries. Like Abra Silver comes to mind, right? Like, they have this huge project there. And in talking to John, the CEO, he said, "Hey, look, we're going to have infrastructure for free. We don't have to pay for any of this because all these lithium guys are going to do it a couple years before we're going to even produce."
Very interesting. You mentioned talking to CEOs and the slew of meetings you've had recently. Obviously that's an ability you have that a lot of retail investors don't have. However, some of these CEOs of the junior miners in particular are pretty accessible. You can email them and they'll respond to you. So for somebody out there who is thinking of investing in a company, particularly in the junior mining space, maybe we can focus here on uranium. What are some of the key questions you think they should be asking a CEO?
Sure. And just before we start with that, I mean, if you go to our website, you can kind of see what our pricing is. It's very affordable for most people. That to me, if I had a service like this and I was an outsider, I would pay for just that access because I write up these stocks and I'm very measured. Like, I don't say, hey, this is a 5-bagger. I've never even used 3-bagger, 5-bagger as a term ever when explaining a stock. It's just too risky, right? You don't know what's going to happen. Case in point, what happened in Panama. But to answer your question, what's your cash position? Okay. If it's low, when are you doing a financing? Just ask directly. But believe it or not, sometimes people say, well, legally I can't tell you that, John, but obviously we're going to need some money in Q1 because we want to drill in Q2 or Q3. Makes sense, right? So then you have to decide as an investor, do I want to deal with a 10 or 12% haircut? We just saw that with baseload, right? Like I said, 42 cents to 32 cents in literally a day. That's no reflection on their project. It's just a reflection on the price that they did their offering at, which was 45 cents Canadian, I believe. I have to double check. But I I'm okay with being diluted if I look at it as a core holding, and I'll just add to it, you know, because and here's why. Look at what happened with Fission, Uranium Royalty, and a number of other stocks in Q4. These guys raised money like champs. They did it at exactly the right time, right? And now look at those stocks. They've all recovered, like, and then some. It's unbelievable. So that to me is one of the reasons that got me interested, because I see what happens, Jesse, to a silver or gold stock. Typically, when you do an offering, let's say for $5 million, you're going to be under pressure for a good month, and then you better do something in that 4 month period, because when the 4 month hold comes off, you get another wave of selling if people want to just sell the shares and hold the warrant, right? So like it can be problematic. So I always ask questions about like the capital raise. How much cash are you really going to need? What's a dream number for you if you were to start drilling more? Because a lot of these guys want to drill more. It's obvious, right? I mean, the Explorcos, that's what they do, but they can't fund it. So the second question is, what are the chances of this company being insolvent? Like, I mean, honestly, like you have to be careful. Anything under 50 cents is like, a stock that you have to ask that question, right? Like, what's your game plan? I've seen stocks well over 50 cents go under over the years, right? Many of them. So what's another question? Jurisdictional risk. Tell me more about, like you said, a place in Africa that I've never been to. I mean, like, you need to just, do a little more homework about some of these jurisdictions, because, I literally talked to someone who was very like up to speed on BTG, not a manager, but like someone who's a huge shareholder. And they were telling me 4 weeks before that news that they were comfortable with everything in Mali and that Clive Johnson had it all under control. But even Clive, who was a mining CEO of the year, had to put out a press release saying, "Hey, we can't get this done right now, and you have to be patient." Right? Like, that's just life. It's a hard sector. Commodities are a really difficult place to be, but there's tremendous upside.
So a new uranium junior mining company crosses your desk, and we're going to be seeing this most likely as the sector evolves. The last bull run, there was a lot more companies with uranium in their name around than we have today. What are the main things you're looking at to determine if it's an investable company? And what are the main red flags that you also look for that allow you to just turn away from that decision?
Well, let's use Costa Resources again. Keith is a young guy, but that's a red flag to me sometimes, because I want experience. I'm very stubborn like that. I want someone who's seen multiple cycles, right? However, when you look at his deep bench of geos and where they've worked, like majors, like Cameco, NextGen, Denison, whatever, right? It's like, okay, these guys have experience working at much bigger companies now. They know what to do, right? They're going to get in the field and do it. And that's exciting. What you try to avoid is a lifestyle type company. And to ask those questions sometimes can be difficult. No one likes to be asked those questions, and people don't really want to ask them of the CEO. However, it's important to understand how much of this money is going in the ground, how much of this money is going to marketing, how much of this money is going to just straight conferences like VRIC, right? It's not cheap to attend these things. And so if you're raising $1 million as a bridge, and you're doing 9 conferences this year, these conferences cost anywhere between usually $10,000 to $15,000 per company, per attendance for 2 to 3 days. So you do 8 or 9 conferences, you're over $100,000 just in conference fees. That's not travel, hotels, entertainment, none of that, right? So, like, as someone who comes from a kind of more of an analytical background, I'm asking those questions because that could be 15% of their whole raise right there.
And how important is insider ownership for you? And does low insider ownership, is that automatically a red flag for you? Or are there some situations where there's a good reason for that?
That's a great question. And I don't look at insider ownership as much as the average competitor of mine. What I look for, Jesse, is, well, let me answer the question first. I would say I should do a better job of that, I think, like of asking that question. Of course, I love to see someone who's got 10% of the float, like in their family's name or their name. Yeah, absolutely. But I don't have a hard and fast number. Does that make sense?
Yeah, absolutely.
When it comes to one of the things I am looking for, and this is something I just mentioned on Kitco as well, is I want to avoid like a take under, and by that I mean, um, when you look at the ownership of all entities, does it equal 30% roughly or higher? That means Eric Sprott, Rob McEwen, Crescat, like just going down the list. Can they block a takeover with the people they have involved in their stock? Because I think things are trading super cheap right now in general in the commodity world, and I'm not interested in a marathon gold deal, where I get 30% payout or something in shares. I'm not interested in that. I'm interested in, can you survive a difficult period of time and get to a better place so you can pay us, create a payday for investors.
Interesting. I do want to turn to some specific names now in the uranium space. You mentioned a few already: F3 Uranium, Kosa Resources, Baseload. Are those companies you're currently investing in or seeing opportunity in? And what are some other names that you think people should be paying attention to? Obviously, Forum is another company we've discussed in the past as well. Are you still seeing opportunity there? And any other names you think investors should be paying attention to in the sector?
Sure. So we still own Forum. As we mentioned, we own things like URA or URNJ on the ETF side. We own some Denison. Our biggest position of that group is Forum, because I think Rick's 40 years of experience are going to pay off. They made a new discovery in the Thelon September of last year. They have since raised over, I think, about 11 million Canadian on the back of that. And that's pretty strong. That's going to fund their entire program coming up in the next few months. So good jurisdiction, good team. Rebecca is great geo in the field. I think it's going to be a winning stock here at 11 cents. I mean, it's just super cheap. But in meeting with F3 yesterday, man, these guys have a deep bench too, and I would say more experience, across all of their management team. They really know how to navigate the markets, and the spinoff. I'm always attracted by spinoffs because you can get something for free, and if you like the stock anyway, why not buy it, and get the spinoff as well. So that's what I own a little bit of, and I'll be paying more attention to. Standard Uranium is something that has changed their business model. When I first looked at that stock 2 years ago, it was less interesting to me than it is now. They just announced 3 more properties. So that was just 2 days ago, right, that they picked up. So that gets them 10 properties now, in the Athabasca only. So they're focused on one region, which sometimes can produce risk. But to me, the Athabasca is so good. Like that's kind of where you want to, put some emphasis, if anywhere. And the stock's at 5 cents, 5.25 cents US. I mean, it's super cheap. I think that looks interesting. And gosh, I think, yeah, a backdoor play again, like I mentioned with Sprott. Another one is Platinex. That's PANXF. It's under 3 cents right now, but Greg just talked a little bit about this over in the fall about Green Canada, which is a subsidiary of the company that they're going to spin off, and it's a pure uranium play. So again, just like F3, you buy Platinex now, you're going to get some Green Canada later in a spinoff. And I would imagine that news is probably, going to be consummated here in March, if not probably April. It's just super cheap at 0.027 cents. So I'm looking for things like that as a value manager, Jesse, that are going to have great upside potential in terms of percentage growth.
And how do you approach adding to uranium positions, or I guess any positions when it comes to your allocation? Are you dollar cost averaging into these stocks? Are you waiting for pullbacks? Are you looking to the RSI, as you mentioned earlier? What methodology do you use to determine whether it's a good time to buy? And then how do you size those positions?
So for Forum, just using that as an example, my first entry point was when Justin Huhn was getting out of the stock. Like he basically got out of the stock. It went from 30 something to 11 cents, right? He has 4,000 paid subscribers, so he's going to move something of that size. I bought it at 11, and then it went all the way to 4, as you know, last August, right? So that was my first entry. Terrible. However, I said on your show, like at 4 cents, this thing is like insane. I think I used the word insane, which I never do, because it was. And so when things get totally bombed out like that, I tripled my position in Forum at 4 to 5, right? And now it's trading at 11 plus. So my blended cost, right? If I bought at 11, bought a little higher, I think around 14, but I bought a lot between 4 and 5. My blended cost is in the green right now. So that's really important. We buy 6 to 10 times, Jesse, in just about everything we do. We don't have, a magic ball that tells us, hey, this is the perfect entry point. So I tell clients all the time, don't worry about it if you make a mistake like that. Even if it's, down significantly, you have to recheck the thesis with me or with the CEO. Make sure that it isn't broken. And if it is broken, then sell. You have to have discipline to sell. Did that answer all of your question there?
Yeah, absolutely. And that kind of leads me to the next one, which is knowing when to sell. So how do you exit positions and how do you determine when it's time to take profits? Do you generally sell positions all at once, or do you scale out?
Well, we're not a huge player, so we could exit something 100% in one day. I tend to not do that because juniors, as you know, are sometimes illiquid. Like if it's December and or August, like low volume months, I'm not going to usually exit something 100% because I don't know who's following me these days, and I don't want to have like a company get cratered because of something that I did. Absolutely not. So I typically will go out in maybe 2 or 3 tranches, and it's all based on what I'm seeing, Jesse, at that time, right? If spot goes from 105 to 70, yeah, I'm going to be selling some things because I know I can reload down here. Like the chart's going to be intact longer term, in my view now, based on what we talked about earlier. So you're going to have some opportunities to buy cheaper. I know it doesn't look like it today. But I think it's a natural thing for pullbacks to happen. So, yeah, I think that pretty much answers your question there.
Yeah, absolutely. And your newsletter covers a whole variety of commodities, not just uranium, gold, and silver. How do you how do you keep up to date with everything going on in the commodity space when you have so much news flow, so much chatter on social media online?
Well, like anyone, I surround myself with people smarter than myself. I mean, that's what you have to do in life. That's how I've had success. I challenge myself every single day to learn. Uranium for me was a 0% position in Q1 of 2020. I had nothing, and in the last call it 4 years, I've really worked hard to try to get up to speed. It's still not my sweetest spot, but I think like having a commodities newsletter, I take it seriously. I mean, I'm writing on tungsten. There's this little junior I just found in Nevada called Golden Metal Resources. They're the only publicly traded tungsten company in the U.S. that I can find. It's like, tungsten is a major component in ammunition. We're sending so much ammunition to the Ukraine right now. At some point, someone's going to realize that China has 86% of the tungsten market. It's like crazy. So we wrote about that in our newsletter recently because they had great news in January. So it's things like that where the average investor has no time to do that kind of research, and I think that's valuable.
Well, tell us about Feneck Consulting, about your newsletter, where people can find it, and what it is you do there.
Sure. So it's fennecconsulting.com. We publicly post our performance there, just like a mutual fund would. So we're very transparent about that, and the newsletter is $65 a month, and that covers all commodities. So we'll write up things like we have an in focus section, Jesse, where we'll focus on one commodity per issue. So it might be silver, and I'll talk about the technicals in silver per a paragraph, and then I'll mention maybe 3 to 5 silver names that look attractive to us for different reasons. I just have meetings all the time at conferences like VRIC and PDAC, and I'm picking up information, so I want to share it. I think that's one of the things that makes us different too. We don't load up on a stock and then share it. that's front running. So we don't do that kind of stuff where we're trying to. We want our shareholders to benefit. I shouldn't say shareholders. I want my followers and clients to benefit alongside of us. We've had a tough run. If you look at our performance, we're not hiding anything. It's like we haven't had a great 24 months in this space, but we also haven't gotten decimated. Sometimes you have to look at what when you go through tough times in investing in general, like, can I come out of the other side? Like sometimes people don't, if you bought, Netflix, let's say at like an all time high and then rode it down through the pandemic, you would have probably hit the sell button at some point. Cause I think it was down 70 something percent at some point. And it's a major household name, right? And you're like, what's going on? I don't, look at Pfizer, look at Bristol Myers right now. I mean, these are household names. They're trading at like 3-year lows as we speak. It's like the world is a scary place. It is just upside down right now. And you have to align yourself with a professional like myself to help you through periods of time like this. You're not going to need me when uranium spot goes to 140 or when gold goes to 2,500. You don't need anyone at that point. You can just throw darts at certain names that have good track records with good management, right? You saw that with gold stocks in 2020. I wasn't buying the super, super small stuff back then like I am now because there's a huge disparity in return. But you could buy a Newmont, an Agnico, a Barrick and make a ton of money in a period of time like that because they're not going out of business, right?
Awesome. Well, I'll put a link in the description below to Feneck Consulting for anybody who wants to check that out. Thank you once again, John, for coming on the show and sharing your knowledge with the audience.
No problem, Jesse. Thanks for having me.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get a $10 discount on your first purchase. Link is in the description below, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.